Message to the Federal Reserve. Take a listen.
I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
Michael Lee, strategy founder Mike Lee, is here with us, but settled the debate because we were talking amongst the three of us that global central banks, the larger ones, are largely cutting rates right now. It's the market, a 30-year, that says, no, we're defying you. We don't believe you, Fed. The bond vigilantes are out, and we're going to rise 100 basis points and defy you. So who does he really need to be speaking to?
Well, look, I think a lot of what the bond market is saying is they don't believe the Fed's going to be able to follow through with this. And there's also this little elephant in the room that's the $9 trillion in debt that needs to be refinanced over the next 12 months. Yeah. Look, if you look at the gap between the 10-year Treasury and the 30-year mortgage, you're at almost 275 basis points versus the historical average of 175, which means there's a problem there. There's not enough shelf space for inventory on dealer balance sheets. So where are all these treasuries going to go, especially if Scott Bessent doesn't do what Janet Yellen does, which is just simply roll over T-bills in perpetuity. So all this issuance coming into the market is pushing longer dated rates out. I believe that's a temporary phenomenon, and we will get past it, and longer term rates will come down.
Mike, the market's hit session highs after Trump's Davos remarks. There's a lot of optimism out there. We've been watching this market continue to climb. Jamie Dimon saying that the market's kind of inflated. He also talked about tariffs and said, if there's a teeny bit of inflation, I'm paraphrasing here, then so be it because of our national security interest. What are we supposed to make of his comments and how people are looking at the markets right now? We know they can't go up forever. We know inflation might be a little bit of a headwind going forward.
Yeah, look, the market rallies like this, like it has for the last couple of years, it always brings reason for concern. And the way that you want to think about that is if you look at the long-term PE multiple of the S&P 500, you're like right around a 16 or 17. You know, we're probably somewhere between a 19 and a 21 over the next 12 months, depending on your view of earnings. If you look at that long-term average, though, you never sit on it. You're either way below it for an extended period of time, or as we have been, way above it for a long period of time. And I think with all the tailwinds coming on right now, likely increased economic improvement. Inflation, maybe some pops of it here and there, but in reality is it's likely to come down because energy costs are likely to come down. Government spending is likely to get under control. And we have this thing called AI going on in the background that is just a massive tailwind for everything markets.
Okay, I'm going to go with today's Mike Lee Super Bull comment of the day. You say that Wall Street simply does not have its arms around the size and scope of what is happening in AI. So even with all the talk of $500 billion, all the soap opera of Altman and Musk, you still say the street's way behind in this. Make your case.
Yeah, well, not even close. When Jensen Huang spoke a couple weeks ago at CES, the story that came out of that was that they were coming out with a laptop. I mean, to me, that was like a side story or should have been a footnote. The things that he was talking about and how fast data is being created and collected. So if you think about it, you take all the data from the beginning of the history of time until the end of the year 2003. We now create and collect that much data every 2 days. A few years from now, it'll be every day, then every 12 hours, then every 6 hours. That's happening on an exponential basis. And so the amount of compute, the amount of NVIDIA GPUs, Marvel, Broadcom, AMD, all these companies, the amount of firepower needed for that, even with this $500 billion investment that may or may not come, it's still just not going to be enough. The data that's being created with these little iPhones right here and everything that we do in every way, shape, or form is increasing. All these things are hockey sticks, okay? And you have Wall Street analysts looking and trying to value companies which should be looked at in the eyes of venture capital more so than an industrial company or a pharmaceutical company, because we're about to see explosive growth.
Well, Michael Lee, we always appreciate your time and your expertise joining us here on this program. Thank you so much.
Thanks for having me, guys.
All right, Mike, thanks. Well, after years of America